Welcome to FX Street Currencies in Play, brought to you by Royal Financial Trading. I'm joined by Matt Brown, who's an FX strategist and a general market strategist, in fact. How are you today, Matt?
I'm very well. Lots of big moves today. It's been quite exciting.
Just in case you wanted to take it easy on the beach for the summer, you can't.
No, indeed.
Right, let's have a look at the headlines. And it really is euro dollar heading for the stars, heading for the sky. Fresh tops above 115, next target 116.16, which is the 2016 high, which is probably the minimum we'll get on this run. And then focus on the ZEW, which I believe was earlier on.
Yeah, a little bit weaker than expected on the ZEW, but that's not stopped the euro rally going on, onwards and upwards.
So who are these people who are saying, 113, that's a really solid resistance, that's the top? Because it melted like it was melted away like a blowtorch through butter, wasn't it?
It's broken through it. I mean, euro's stronger, and it's dollar weakness as well. So obviously we're seeing a euro push a lot higher, as we can see there, 115.
Those you can't really argue with these. You can see the pattern there really from here, which I think was last Friday, then another one, and presumably now, as we speak, we'll have another 15-minute power candle.
Yeah, it's taking out the stops and pushing higher. As I say, 116 or above could be the next level.
And okay, well, so we go on to sterling, which perhaps is an easier market to read at the moment, weaker than expected CPI.
Yeah, a lot came in weaker than expected. I think everyone was looking for 2.9 around 2.4 level, driven by lower oil prices, and really the pound had a strong run up over the recent weeks, and certainly into the number. Some people saying if we saw 2.9, we could see cable at 1.33. Not the case. Weaker number is going to shut up the hawks, certainly in the MPC. And lower back down we go. We could test the 130 level to the downside.
I have to say, it reminds me of yesterday's trade of the day, which was sell at 130.60 on stop. I think it was close out at 130.30, which seems to have worked rather well, just as in the last hour or so.
Yeah.
But I mean, that 130.60 area was spot on in terms of if that gave way, then
yeah, little resistance to the downside, and let's see, maybe 129 could be the handle as the next stop.
Dollar yen, my favourite cross, down to 2-week lows around 112. US 10-year drops below 2.3%. So here, quite a sort of volatile move yesterday afternoon. I think we sort of had that counter move towards 112.90, and then that was just a spike, stopped everybody out, and back down again. So 112 the floor at the moment. Probably going to go down to see that again later in the day?
Yes, I mean that'll probably come back down, but I think people are probably looking for buying opportunities below 112. There is a general trend upwards, but in the short term we're looking downwards. But there could be buy the dips on this pair.
Trade of the day, pound dollar, weak CPI data at 2.6% versus 2.9% dampens prospect of a rate hike in the near future, or further tightening at least. Cable lower already and around support following an overextended move higher. Sell stop at 129.95 with a stop around 130.35 and take profit at 129.15. Reward to risk at 2.2 to 1. So obviously we've had the move down there, and you can see that's opened up the lows of I suppose last week really.
Yeah, indeed, a lot of downside. I do like this trade. I would definitely be short cable at these levels.
Yeah, I think it's one of those things. I think I've said it before here on this show. Stopping yourself into a trade can be a clever way of not having a dead position.
Exactly.
And also, it tends to be a rather more level-headed or cool-headed trader rather than just like pressing the sell button or buy button and going in immediately and then.
Exactly. Set your stop levels. Don't sit there and on the bid and offer and press buttons. Have a plan, stick to it. Have an exit strategy, obviously, as we see here.
That applies to many areas in life.
Indeed, very much so.
Right, trading positions, happily and luckily, this is the trading positions of including everyone, so not just the retail investors, the banks and institutions as well. So they are long of euro dollar, long of the pound. Maybe they'll look at that again.
Yes.
50-50 on dollar yen, which is what you expect around the current 112 key area there. Very short of dollar Swiss, but I'm not sure how many people trade that after the Bank after the Swissies.
A lot of people had their fingers burned.
Euro Swiss was not the place to be.
No.
But dollar Canadian on the short side, and obviously that's going with the trend. 50-50 on the Aussie dollar, which has rocketed, I think, overnight. Let's have a look at that. So here we have a situation where we had a breakout from the mid, 70. Well, should we go back a bit on that? 78.40 was sort of resistance, and we just cleared that really easily and rocketed another 100 pips.
Yeah, it's a strong move, big breakout move. Like the Aussie dollar at the moment, but maybe worth looking at the Aussie versus the pound as a pair trade as well.
Right, but I mean, you see this. I mean, this is just literally underlying the fact that it's been a very active summer to date in the currency markets.
It has. There's a bit of volatility. I expect more, certainly in the currency markets over the next coming weeks. I
suppose the big question is whether you think that will spill over into the equity markets at some point.
I think the equity markets are a little bit asleep at the moment. They may react to some FX moves, but I think for volatility and trading opportunities, it's certainly in the FX market over the next couple of weeks to a month.
Okay, let's move along to the economic calendar, export and import price index in the US at 130. And then Mr. Carney's speech, I suppose he'll be gloating over the lower inflation number.
Well, actually, I don't believe there's going to be any policy references today from Carney. There may be a small note to the CPI data out. It's the launch of the new £10 note, I believe. So that comes out at 2:30. Look out for the export-import data at 1:30 from the US. I think that could be key. See where the dollar's going to move. It's been weak of late. If we get some good numbers there, obviously the dollar should improve. But I think they're going to be weak export-import numbers. And obviously the housing market number out at 3. That's not really that market moving. But the key one are the US numbers at 1:30 today.
Okay, Matt Brown, market strategist. Thanks for helping us here with the FX Street Currencies in Play, brought to you by Royal Financial Trading.